Okay, let's just jump right in. We're going to clear up one of the biggest points of confusion for anyone new to investing. What is the actual difference between a share and a stock? Getting this right, it's the foundation for everything else.
So let's just tackle the big question head on. Are share and stock basically the same thing? It's a question millions of people ask, and honestly, the answer's not a simple yes or no. It's a little more nuanced than that.
And here's why we're even talking about this. This isn't just about sounding smart or getting some vocabulary right. Nope. This small misunderstanding can actually lead to some pretty big confusion that can genuinely cost you real money down the line. I mean, just to put this in perspective, think about this number. Over 150 million people in the US invest in the stock market. That is a huge number of people putting their hard-earned money out there, and yet so many get tripped up on the absolute basics. So, yeah, we're calling this a costly confusion. And for good reason. Let's really break down why this little mix-up can have such a massive impact on how you think about your investments and the market itself. Here's the truth. Most beginners don't fail because they can't figure out some super complex trading strategy. They stumble because they never really got a solid grip on the fundamental building blocks. It's kind of like trying to build a house without knowing the difference between a brick and a beam. The whole thing is wobbly from the get-go. Okay, so how do we make this crystal clear, once and for all? We're going to use the simplest and honestly, the best analogy out there. The pizza analogy. I'm telling you, once you hear this, you will never get these two terms confused again. It really is as simple as this. Imagine a whole company. Let's say Apple is one giant pizza. That entire pizza, that represents the company's stock. And a share, well, that's just one slice of the pizza. When you invest, you're buying individual slices, and each little slice is your piece of ownership in the whole pie. So, to put it in slightly more official terms, stock is the big general idea, the concept of owning a piece of a company. A share is the specific, countable unit of that ownership. But why do companies even do this? Well, they sell these little pieces, these shares, to raise money or capital so they can grow the business. So when you buy a share, you're not just getting a piece of the pie. You're actually helping fund that company's future. Seriously, if you take away just one single thing today, let it be this. Stock is the big idea. Share is the small piece. That's the easiest way to keep it straight in your head. Okay, so we've got the pizza analogy down. But how does this all go from being a simple analogy to something that actually affects your bank account? Let's talk about turning those pizza slices into real dollars. All right, check this out. It's a perfect real-world example. Let's say you decide to invest in a company's stock, and you do that by buying 10 shares. Each share costs you $100, so your total investment is $1,000. Now, let's say the company does well, and the price of each share goes up to $150. Your 10 shares are now worth $1,500. Boom, a $500 profit. But if things go the other way and the price drops to $70, you've lost $300. You see? The math itself is incredibly simple, right? But the impact on your investment is direct and really powerful. The value of your individual shares is what decides the total value of your stock ownership. Okay, so the math is easy. We get it. But just knowing how to calculate profit and loss on your shares, that doesn't guarantee you're going to be successful. And this is where we need a little bit of a reality check. Because the definitions, they're just the very beginning of the story. And look, let's just be honest for a second here. Knowing the definition we just covered isn't some golden ticket. It's essential, for sure, but it won't, by itself, make you rich. But not knowing it? Well, that can definitely help you lose money. So why do so many beginners fail? It almost always boils down to a few things. They try to skip the basics, just like what we're talking about today. They get all tangled up in the terminology, they start following hype they see on social media instead of using logic, and ultimately, they put their money into things they just don't really understand. So what's the other side of that coin? What does the path to real long-term success look like? It's not about some secret algorithm. It really comes down to these three things: a real commitment to keep learning, having the patience to let your investments actually do their thing, and the discipline to stick with your plan even when the market gets a little crazy. Okay, so now that you have this clarity, let's make it something you can actually use. This last part is a simple roadmap, your first clear steps to get started on the right foot. Here's the plan pretty much anyone can follow. First, master the basic terms. Hey, you've already made a great start on that today. Second, start small. You really don't need a ton of money to begin. Third, use apps that are actually designed for beginners. Fourth, stick with strong companies you already know and probably use every day. These are often the giants, the ones with a massive total stock value, which is usually a good sign of stability. And finally, and maybe most importantly, focus on long-term growth, not short-term gambles. If I had to boil this entire explainer down to just one idea, this would be it. Focus on getting clarity first. The money, that comes later. It's a result of clear thinking and consistent action, not the other way around. And let's end on this powerful thought. Success in investing isn't reserved for some kind of genius. The people who really win in the long run, they aren't always the smartest people in the room. They are the ones who are the most clear about their strategy and the most consistent in actually doing it. So there you have it. We've untangled the confusion and laid out a clear path forward. The final question isn't for me to answer. It's for you. Now that you have clarity, what's your next move?